Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Monday, June 22nd, 2009. We begin this week's coverage with a look at one of the most popular carry trade pairs, the Aussie yen. Stocks were mostly higher in Japan and Australia, but European equity markets slid sharply lower overnight, followed by a big drop in US stocks. That put pressure on risk appetite, driving this pair down about 200 pips in favor of the yen for the session. That fall wiped away the gains the pair saw to end last week and is close now to retesting support at 75.15. In fundamental news from Japan today, the BSI Large Manufacturing Index rose to negative 13.2 for the second quarter, a large improvement on the first quarter's negative 66. The index, which measures business optimism, is a leading indicator of economic health. Even though the number still remains negative, it's a sign that the number of pessimists is at least decreasing. A second release, a measure of services activity, rose 2.2% in April. That figure came mainly in line with expectations. The news today helped the Greenback gain against its higher-yielding rivals, such as the Canadian dollar. Following a period of consolidation that lasted almost all of last week, the pair broke about 200 pips higher to test the 1.1550 level today. The advance by the yen and Greenback was fueled by a report from the World Bank that said the global recession will be deeper than it first predicted in March. That hurt the price of crude oil and other commodities, which pressured currencies like the Aussie and Loonie. The euro-dollar pair slid in today's trading to 1.3825 following a test of 1.40 on Friday. The decline in favor of the greenback here wasn't as strong as it was against the commodity block of currencies. The rise to 1.40 did come up against a downward sloping line of resistance, which connects the recent major highs this month in the pair. So far, the pair has been unable to breach this line, and today's action broke below a short-term level of support set up last week. The pound-dollar pair fell about 160 pips from its open, bringing the pair back into its range from last week following a rally on Friday that tested the 1.6550 area. The sharp slide in stocks in Europe and the report from the World Bank may give pause to hopes of a quicker-than-expected recovery for the global recession. Traders may also be squaring their positions prior to Wednesday's FOMC interest rate decision and statement. Data from the Eurozone showed German business confidence rising for a third month in June. The IFO Business Climate Index climbed to 85.9, mainly as a result of improved expectations for the next 6 months. In the UK, the Rightmove House Price Index fell 0.4% on the month, the first decline in 5 months. On the year, prices were down 5.5%, a third straight improvement since February's negative peak of 9.1%. Tonight, look for consumer confidence data from Germany, trade figures from Switzerland, flash versions of manufacturing and services PMIs from the Eurozone, and data on mortgage approvals from the UK. Tomorrow, the US posts data on existing home sales, house prices, and manufacturing in the Richmond Fed region. And that wraps up today's broadcast. Thank you for watching us here at CMSFX.com, and happy trading.